Nordstrom, the latest retailer, slashing its annual profit forecast on weak holiday sales as consumers cut back on discretionary spending. And they're not alone. Macy's warning its holiday quarter will come in light, while Lululemon said that it expects profit margins to drop. Here to discuss that and more, we want to bring in Steve Lamar, American Apparel and Footwear Association CEO and President. Steve, it's great to see you again. So some of the weakness, some of the concern that we've been hearing from CEOs, from executives in the retail sector, what do you make of it, and what do you think that signals for the year ahead?
Well, I still think that, consumers were out in force, this past holiday season. They were looking for good deals, looking for a way to stretch their dollars. And, what I saw in the numbers was what I would call a measured but strong consumer, which is really important in our consumer-driven economy if, we want to engineer that soft landing we keep talking about and really build in sustained long-term growth.
What are you broadly seeing from the consumer right now? It's an interesting mix to see retail sales in December down 1.1%, but the National Retail Federation showed a pretty big pop for the holiday season. What are you seeing?
Well, consumers are still out. They still need to buy. And, we hear this discussion about, moving from goods to services and experiences. And yeah, one of the things that we often realize is that even in experiences, you need to have, the right fashion, whether it's product to go out outside, product to go to, a dinner, an event, whatever it might be. So there's still room for a lot of fashion and a lot of clothing and shoe purchases, even when consumers are switching to those more experiential items.
Steve, two big issues that we have seen consistent throughout the sector here, inventory levels and also supply chain issues. How real are those challenges today? And do you see that significantly improving soon?
Well, I think both of them have improved. I mean, there's always going to be supply chain concerns. You're looking at, we're coming out of or going into Lunar New Year right now. So the question is, when you come out of Lunar New Year, how long will that take for that to resolve? And of course, we're coming up on the 6 month of the West Coast port negotiations. We still don't have a long-term deal there. So those are always raising concerns. At the same time, people have been working for, supply chain normalcy for a very long time. And I think during the last 3 years, people have been really flexing those supply chain muscles to build in agile, flexible supply chains, really to be able to respond to just about any situation. I'll tell you, the big thing that's really tripping a lot of people up is, the Biden administration is still charging very, very high tariffs. These Section 301 tariffs. They've actually now collected more tariffs than the Trump administration has. And those tariffs, they're not changing behavior in Beijing. They're just making it more expensive for people to get to work and just raising costs at a time when people are trying to address inflationary issues.
How do you quantify the impact of those tariffs?
Well, it shows up as prices. I mean, look at a case of, we're looking about pocketbook issues, right? We talk about this all the time, and it's kind of hard to be sensitive to pocketbook issues when a pocketbook itself is going up 40% because the tariff rates can add that much to the price of the item itself.
Steve, Biden hasn't reversed the Trump era tariffs. What have your conversations been like with the administration? And are you optimistic that maybe we will see some of those tariffs peeled back?
Well, we're right now in the middle of a review. It's this 4-year review where the administration is trying to determine whether it's a good idea to continue them, to continue these tariffs. And in all of our conversations, we've been pointing out that, tariffs are fundamentally, especially tariffs on clothing and shoes, fundamentally a regressive tax. I mean, it hits those lowest income Americans hardest because these are basic needs. These are items that they can't afford to do without. So we think the administration is very sensitive to that. I think they still want to look tough against China, and they still want to look like they're using trade policy to advance some of those fairness issues. We agree. We just don't think tariffs are the right way to do it.
How would you characterize the China reopening? How does that impact your industry?
Well, it'll be good news. I mean, look, we've been very saddened to see the COVID spikes and outbreaks that have been going on. But over the next couple of weeks, especially as you go through the Lunar New Year, you're going to start to see more and more, I think, supply chain normalization occur from China itself. And, as we've been looking at these supply chain challenges over the last couple of of years. A lot of times it's because of disruptions that have been going on in China as a result of the zero COVID strategy, not because of outbreaks. So as we start to see that normalization occur in China, I think that's going to greatly benefit and positively affect the rest of the world.
And Steve, you represent your company here represents more than 1,000 brands, 1,000 retailers, your association there. What are the conversations that you're having with the CEOs, with executives today, and how have they changed from what we've been talking about for the last 12 months?
Well, I think the big focus right now is really trying to maintain that agility with supply chains. I mean, over the last couple of years, people have learned some very important lessons about making sure that your supply chains are better suited to manage all kinds of challenges and even challenges that you don't foresee. And so, what can you do to make sure that your supply chains are really well situated for that? And I think that's what a lot of people are really looking at right now.
American Apparel, Footwear, and Apparel CEO and President Steve Lamar. Good to see you, sir. Thanks so much.